This is our Forex blog for July 23rd, 2012. And like we do most days, we want to buy the strong currencies versus the weak and sell the weak versus the strong. This is our currency meter. This is step one of our three-step easy Forex trading system. And it shows you the real-time trend strength on the top, 15-minute trend, hourly trend, daily, weekly, monthly. Obviously, the more time frame trends that line up, the more likely that trend is to continue in that direction. Currencies, continue to trend until there's no one else left to buy or sell, and then you tend to get a counter trend move. Most of the time, if the longer term trends are in the direction of the real-time trend, after the pullback move, the market will resume the longer term trend. Sometimes currencies will move 3, 4, 5 days in a row, and you'll have 1 to 1.5, sometimes 2 or 3 days of a pullback where it goes in the opposite direction. That's pretty much the case you can see today with the euro. The weekly trend is very weak. The monthly trend is really weak. But today, the real-time trend strength is strong. Obviously, on days like this, it's a lot harder to trade, especially with currencies like the euro, because you don't know if the counter trend move is going to last for a half an hour, hour and a half, 3 hours, and then the longer-term, weekly, monthly trend will resume. But today, you can see a little bit of weakness came in, and then the strength back, weakness, strength. So one of the reasons that I'm a short-term trader myself is because it's much easier to predict where the short-term trend direction is going to go than where the longer term is. In other words, if you see a lot of momentum to the upside followed by, significantly less weakness, that previous momentum move is likely to continue. It's more likely to continue when all the longer time frame trends line up, but for the most part, you can trade this way. And here you see a little bit of weakness. Strength, weakness. At that point, it's really hard to gauge where it's going to go because you had more weakness than strength. The longer term trends down, but previously to that, we've had, considerable strength. So always keep that in mind when you're trading. If you can spot a pair that has more, weakness on all time frames, like the pound, a lot of weakness, 15, hourly, daily, weekly. The more short-term trends, the better. And you can see this is around 430. The yen was very strong before that, then it had a little bit of weakness. Usually, most of the time, you can expect the trend to come back. In this case, it didn't for a while. It had a lot more weakness here, then the strength came back. So always look to see what the, when it's most likely to work. You can see a lot of strength in the dollar. And so at that 430 time, basically you want to sell the pound dollar and look for sells in the pound yen. You might have a loss. The losses are always going to be small. You want to keep them 6 to 10 pips. In this case, you can see the pound dollar. 430 is right around here. This one's near the lower containment band. You got a sell signal right here. It fell about 25 pips. Another sell signal right here. Fell about 50 pips. The euro or the pound yen is probably a little bit less likely to have worked at that time. And one of the reasons for that is the pound yen had gone and is underneath the 3.0 green containment band. The 3.0 green containment band tends to contain price. Typically when it's underneath here, you're going to get a counter trend move up. So even though it's extremely weak, if you look to buy every time the green band gets hit, you can see this one went sideways, went underneath there, popped up about 25 pips, hit it, popped up 15 pips, hit it, popped up 15 pips. Didn't quite hit it, but it was 3 or 4 pips away from it, and popped up about 45, 50 pips. When a currency is down statistically too far, you're much better off waiting for a more significant pullback before you sell it. And so you draw your fibs on there. And most of the time you want to wait for a 38% fib pullback or to a major resistance area. Another tool that we release that can help you identify a decent sized pullback. Once you know a currency's gone too far, you want a decent sized pullback before you look to continue to sell it. You put the Fisher oscillator on there, and when this gets up to the upper white, this is pretty much showing you when it's kind of at an extreme level and likely to reverse. You can see when it showed it was an extremely weak down position, it proceeded to go up about 30, 35 pips. Most of the time when these levels get hit, the market either goes sideways or you get a pullback. And it's even more likely, obviously, to work when you're trading with the direction of the trend. The pound was weak today, the yen was strong, and so here you can see it was right near the upper level. We got a sell signal with our FX trade signals. This is very likely to work. You sell it when it goes 1 pip underneath there. It went from 48 all the way down to about 31. It fell about 17 pips. 10 pips per day doubles your account every 2 months. So always keep that in mind. You need 50 pips a week, 200 a month, 400 pips, risking 2% of your account on any given trade. Position sizing is, watch our videos to decide how to use that. And also, this was a wonderful trade because you had extreme weakness. The real-time trend strength was down. The 15-minute, the hourly was down, daily, weekly, monthly was down. It was so weak that it went to the lower containment bands, the 3.0, which typically is going to cause a reversal, but it doesn't mean it's going to go up the rest of the day. It just means it's done going down when it gets below these levels, and it's likely to go up, which you can see pretty much happened all day, or also can go sideways. So when you get a trend signal, and it's pulled back enough, hits the upper 2.5 level, I found to be an area that's pretty high probability reversal, you get these kind of trades. Now sometimes the market pulls up like this a little bit later. You go short, you put your stop above the high, it's going sideways right there, and you would have got out of this trade with a 5 or 6 pip loss. And a lot of times when the market's down this far, it makes a two-wave pullback, which is, if you watch our video, Elliott two-wave fib system, this is a trading system we've been teaching probably for 3 or 4 years. Anytime a market's gone statistically too far down, a lot of times the first time it makes a small bounce. Once there's no one left to sell it, you can see the statistical weakness fell off a cliff. It didn't even hit our dotted 80 line, which we consider significant. When it's going down without that much statistical weakness, and it's at a level where it's likely to reverse, it's even more likely to reverse. It's also, as you can see today, more likely to make a two-wave move up. Most of my blog videos, I go over simple ways of trading. On days like this, our more advanced methods obviously come into play. A lot of people want a simple way of trading. They don't want to do any work, and so therefore they don't know what an Elliott two-wave fib pullback system is or how to use Fibonacci, and they don't understand support resistance, confluence areas, or how to use official oscillator to know when a pullback is enough to continue to get back into the trend. Position sizing, all that stuff's very key. Most days when the market's just trending one direction, or all the time frames line up, you're going to get pullback trades. You get into the trend, and most of the time they work. They go your way, and trading's easy. But again, on days like this where different time frame trends are all in different, the real-time trend of the euro might be up today, but the weekly, monthly trend's extremely weak. It's much harder to trade those days. So keep that in mind. And if you learn anything today, what you don't know probably will cause you to lose money. So we give our training videos away for free. We used to charge in the past. So watch as many of them as you can. There's 20 topics. At least watch one video of every topic and learn, or at least be familiar with this. And when you recognize the currency's gone down too far and the weakness is kind of ended, it's not too bad to do a counter trend trade. Wait for a two-wave pullback and then look to get back into the trend. As you can see, when it hit that fib target, good place to get in. The market was at the upper level of being overbought, and then it proceeded to fall back down about 45, 50 pips. Another thing that makes trading easier on days like this is using our sortable currency meter. When you sort these from strongest to weakest, or weakest to strongest, I prefer the strongest ones on top. I like to sort by the hourly trend strength. You get to see something like the Swiss, very strong. Second most strong one's the euro, and then the dollar. You don't want to buy or sell any of these three versus each other. You can see the dollar's strong on all time frames. The New Zealand's weak on most of the time frames. So selling the New Zealand dollar makes a lot of sense. When you sort it like this, you can kind of much more quickly see which real-time trends match the longer-term trends. Now this one has a monthly trend that's up. Monthly trends can take 5 trading days to 2 weeks sometimes to change direction. If it was a super strong uptrend, it can take again 3 to 10 trading days to switch direction. So I kind of ignore that myself. I only use it to trade a little bit larger lot sizes at times. But pretty much a no-brainer trade today, because all the time frames are up on this, and for the most part down in the New Zealand, is looking for New Zealand dollar sells. And you can see this fell a lot on Sunday. Notice the 3.0 band never got hit today, which means you can still continue to look for sells in this. I don't like to get into sells at or underneath the white band. I prefer, actually sells above the 1.5 red band or at it. You can see the sell right here. I probably would have taken that one and this one. And let's put the Fisher transform on this oscillator just so you can see what a decent sized pullback is. So this one was pretty close to that level, and it's also right near the previous week's low. When the price breaks from above to below the previous week's low, it tends to be a good place to get into a trend when it pulls back and touches it. A support area, once broken, tends to become resistance. You can see it acted as resistance here and here because people stopped buying a few pips away from the previous week's low. Also notice on the way up there wasn't that much strength, and it's also at a likely reversal area, and it wasn't more than one more bar in our 5 pips per bar range charts before the trend continues. Now these signals that we come up with look for a certain number of bar pullbacks. In this case it went up 2, down 1, up 2, down 1. This isn't a pattern that's in our system yet, which is further evidence and reason why people should learn how to trade. So when you spot a decent pullback like this, no matter what the bar pattern is, you can decide it's worth taking a shot at it, and you go short, and you can see it went right down to the fib target down here. Fib targets are excellent profit targets. Myself, these circles are counter trend trades. When it goes down there, I'm more than likely going to get out of this trade right here. I would have been short maybe 79.14 and out somewhere as it goes sideways at 14 right here, or 94, I'm sorry. So that was about a 18-19 pip win. You're risking, in this case, probably 8 to 10 pips, and your profit was 1.5 to 2 times bigger than your risk. That's the only key to trading. You shouldn't worry about whether a trade works or not, whether you'll have a win or a loss. You should only take trades that are likely to give you many multiples of what your risk is. If you consistently get 1.5 times bigger profits than your average loss, and you're right 45–50% of the time, you're going to make money. It's that simple. And it also is a lot less stressful trading when you know you don't have to be right even 50% of the time to do well trading.